Most traders don't lose because they trade badly. They lose because they trade too much. There's a version of you that sits down every morning, opens the charts, and feels like something is supposed to happen, like the market owes you a trade today. Like sitting still means you're falling behind, and so you find something, you talk yourself into a setup that isn't quite there. You adjust your criteria just enough to justify clicking the button, and then you wonder why the result doesn't match the strategy. That version of you is not undisciplined. That version of you is simply untrained in the hardest skill in trading. Waiting, not passive waiting, not hoping, not refreshing your charts every 3 minutes, looking for something to change. The specific, active, intentional skill of recognizing that the right setup has not appeared yet, and choosing to do nothing until it does. By the end of this video, you're going to understand exactly why waiting feels impossible, what is actually happening in your brain when you force trades, and the exact method that professional traders use to turn patience from a personality trait into a repeatable system. And the last thing I'm going to show you will change the way you think about doing nothing forever. Here's the uncomfortable truth about forced trades. When you look back at your trading history, really look trade by trade, you will almost certainly find the same pattern that every unprofitable trader finds. Your losses are not evenly distributed, they are clustered. And most of them come from a specific type of trade that, if you're honest, you knew wasn't quite right when you took it. You saw something that looked like your setup. Close enough, the structure was there mostly. The confirmation wasn't perfect, but it was nearly there, and you had already been watching the charts for 2 hours without a single valid opportunity. So you took it. That trade, the close enough trade, is where accounts go to die. Not because one close enough trade ruins you, but because close enough trades teach your system something dangerous. They teach you that your rules are negotiable, that the criteria you wrote down are starting points, not requirements. And once your brain learns that the rules bend under pressure, they will bend every single time pressure appears. The market does not reward participation. It does not care that you showed up. It does not care that you studied the charts for 3 hours. It will take your money just as efficiently on a forced trade as it will on a clear one, and it will do it faster. So the first thing you need to accept is this: a day with 0 trades is not a failed trading day. It is a successful one because you protected your capital, you protected your data, and you protected the integrity of your system. But knowing that intellectually and feeling it in the moment are two completely different things, and if you've been trading for any amount of time, you know exactly what I mean. Let's talk about what is actually happening when you can't wait. Your brain does not experience trading neutrally. From the moment you open your platform, your nervous system is activated. There is money on the line, either real money or the possibility of it. And your brain responds to financial opportunity and financial threat the same way your ancestors responded to a predator in the grass. With urgency, that urgency has a specific neurological signature. Your prefrontal cortex, the part responsible for rational planning, rule following, and long-term thinking, starts to lose influence. And older, faster, more emotional brain structures take over, structures that are built for action, not patience, structures that interpret stillness as danger. This is why waiting feels physically uncomfortable to most traders. It is not a character flaw. It is not weakness. It is your nervous system doing exactly what it was designed to do: push you toward action in an uncertain environment. And here's what makes trading uniquely brutal. The market is designed to exploit this response. Price moves constantly. There's always something happening, something that almost looks like your setup, something that your activated brain is very eager to reframe as a valid opportunity. The market generates noise that looks like signal, and your brain, in a state of urgency, cannot reliably tell the difference. The traders who wait successfully are not the ones who somehow feel no urgency. They are the ones who have built external systems that make the right decision waiting easier than the wrong decision. They have removed the moment of choice from an emotional state and moved it to a calm one. That is the entire secret, and in a moment I'm going to show you exactly how to build that system. But first, you need to understand what a real setup actually is, because most traders have never defined it precisely enough to know when they don't have one. A setup is not a hunch. A setup is not price looks like it wants to go up. A setup is a specific predetermined combination of conditions that you have decided in advance when you are calm, rational, and not staring at a live chart constitutes a valid reason to risk your money. Every condition must be present, not most of them, not the important ones. All of them, this sounds obvious. It is almost never practiced. Here's what happens in reality. A trader defines their setup in general terms. Something like, I trade pullbacks in trending markets with confirmation at a key level. That sounds like a plan, but it is not specific enough to protect you when your brain is activated and price is moving. Because what counts as a trend? How deep does the pullback need to be? What exactly is a key level? What constitutes confirmation? One candle, two candles, a specific pattern. What time frame is the confirmation on? Every undefined variable is a gap. And when you're sitting at your desk with no trades open, 2 hours into a session, watching price do something that is close to your setup, your brain will fill every one of those gaps with whatever answer justifies the trade. This is not stupidity. This is just how human cognition works under pressure. We are pattern completion machines. We see almost patterns and our brain completes them. The defense against this is ruthless specificity in your setup definition. You need to be able to answer for every single component of your setup, what counts and what doesn't, with no room for interpretation. When you have that level of specificity, waiting becomes easier, not easier, because now you have an actual checklist to run against what you're seeing on the chart. And when one item on that checklist is missing, the decision is already made. You don't trade, not because you chose patience in that moment, but because the conditions for trading were never met. Here is the system. 4 components. Every professional who has learned to wait has some version of this, whether they call it that or not. The first component is your pre-session declaration. Before you open a live chart, before price is moving, before anything is activated, you write down exactly what you're looking for today, not in general, specifically on this session, on this pair, at this level with this confirmation. You're not reacting to what you see. You're defining what you're hunting before you go hunting. This matters more than almost anything else in trading, because the moment you open a chart without a predefined target, you have put yourself in reactive mode. And reactive mode is where forced trades are born. The declaration takes 5 minutes. It is the 5 most valuable minutes of your trading day. The second component is your no trade criteria. Just as important as knowing what you're looking for is knowing what will disqualify a trade. You write this list before the session too. Things like, if price has already moved more than a certain amount before the setup forms, I don't take it. If the setup appears within 30 minutes of a major news release, I don't take it. If I have already hit my daily loss limit, I don't take it. These are not rules you apply in the moment. They are decisions you have already made the moment you're in the session. These are non-negotiable. They exist to protect you from yourself at your most activated. The third component is the physical pause. When you see something on the chart that looks like your setup, you do not act immediately. You stop, you look away from the screen for 30 seconds, you breathe, you let the activation in your nervous system drop slightly, then you run your checklist. 30 seconds feels like nothing when you describe it in the moment with price moving. It feels like an eternity. That discomfort is information. It tells you your brain is activated. And an activated brain should not be making financial decisions without a filter. After 30 seconds, you pull out your setup definition written not from memory, and you check every condition. If they are all present, you trade. If any one of them is missing, you do not. No debate, no negotiation. The list decides. The fourth component is what you do while you wait. This is the one most traders ignore, and it is why waiting becomes unbearable for them. If your only activity during a trading session is watching the chart and waiting for a setup, you will force a trade eventually. The boredom and the activation together are too much. You need a parallel activity, something that keeps your mind engaged but does not require deep concentration. Reviewing your previous trades, updating your data system, reading your trading plan, marking up higher time frame levels on a separate chart that is not the one you're actively monitoring. The goal is to stay present and occupied without staring at live price action, because staring at live price action with no defined target is how close enough trades get taken. There is a concept I want to give you that will change how you think about patience permanently. In trading, every trade you don't take is also a decision. It is not an absence of trading. It is a trade in the opposite direction, a trade that says the expected value of doing nothing right now is higher than the expected value of entering this market. When you force a setup that doesn't meet your criteria, you're not being active. You're choosing a lower expected value outcome over a higher one. You're, in the most literal sense of the word, making a bad trade, not because of what the market does afterward, but because of the quality of the decision. At the moment you made it, the market will sometimes reward your force trade. Price will go your way. You'll close it green and feel validated. And that validation is the most dangerous thing that can happen to you, because it teaches your system that the decision process was correct. When the only thing that was correct was the outcome over a large sample of trades, decisions made with incomplete setups will lose money, not sometimes statistically, consistently, inevitably, because you're entering the market at a moment when your edge does not exist. And without edge, you're gambling with extra steps. Waiting for the right setup is not patience for patience sake. It is the act of preserving your edge until the conditions that create it actually appear. Every time you wait and pass on a substandard setup, you're not missing an opportunity. You're protecting the opportunity that comes after it. Here's what the best traders in the world have in common that nobody talks about enough. They are comfortable with inactivity in a way that most people never become, not because they don't want to trade, not because they don't feel the pull of the charts, but because they have done this long enough to have deeply internalized one truth. Their income does not come from the number of trades they take. It comes from the quality of the trades they take. A sniper waits sometimes for hours, sometimes longer for the precise moment when all conditions align, and then they act with full commitment. One shot, maximum precision, no wasted rounds. That is what you're building, not a trigger finger. A set of eyes that can look at what the market is offering and say, not yet, not this one, and mean it without anxiety. Without the feeling that you're falling behind, without the need to do something just to feel like you're participating. Because participation is not the goal. Profit is, and the path to profit runs directly through the discipline of doing nothing until the moment arrives that makes doing something worth it here. Is your framework for tomorrow morning, before you open a live chart, write down your target setup in full. Every condition, every component, the exact structure, the exact confirmation, the exact level. If you cannot write it down completely, you do not have a clear enough picture to trade from. Write your disqualifiers, the specific conditions under which you will pass on even a valid looking setup. Set your physical pause rule. 30 seconds minimum between seeing a potential setup and running your checklist. No exceptions. Have your parallel activity ready. Know what you will do between setups. So the waiting has a shape and a purpose. And at the end of the session, whether you took 0 trades or 3, evaluate yourself on process, not result. Did you follow your pre-session declaration? Did you apply your disqualifiers? Did you take the pause? Did you run the checklist? If yes, it was a good trading day, regardless of what the market did, because that is the standard you're building toward, not winning today. Building the kind of trader who wins consistently by being precise, being patient, and being willing to do nothing until the moment the market gives you exactly what you came for. That version of you is closer than you think, but it requires one more thing, something that works directly underneath everything you just learned, something that most traders skip entirely, and then wonder why the patience doesn't last. That's what the next video is about. Watch it now, because without it, everything you just built will start to crack the first time the market goes quiet for 3 days straight.